I would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name is Robert Whitelaw, and I am the Rebel Broker, licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. Continuing to luxuriate in my facial hair. I promise we will not be dedicating any more than that of the show relating to my facial hair. So, my gift to you. I hope you all are well. Welcome to it. This Tuesday, July 7th, 2016. I'm going to try to remember that. The post in Facebook, I believe it was from Rob, was asking if I could include that at the beginning of shows. I'll give it my best. I think there was a period of time I tried to do it several years ago, and I did it for a few weeks and then forgot. But anyway, so I'll make an effort to try to put the date out there. I hope you all are doing well. We're closing in on the end of the week. And I came across another interesting article that kind of had me thinking. There are some markets I'm more familiar with than others. Clearly, the one that I'm most familiar with is my local market right here in Northern California, in Morgan Hills, South San Jose, Los Gatos, Almaden. The market's really going all the way up to Sunnyvale, Santa Clara, and then up to Cupertino and Mountain View. Those are areas where I've lived and I've worked and I've done business in real estate all the way. And then if you extend it down the beach, all the way down past Santa Cruz, down to Aptos. So whenever we're talking about some of these broader areas, I'm forced to speak a little bit more anecdotally because a lot of times I don't have on-the-ground data that I would normally have if I was a real estate agent in those areas. But there was an article that came across, and it had me thinking about the opportunities available for investment out there. Now, this one particularly is interesting because it's trying to call out the best U.S. markets to invest in real estate. And this is from Realty Times. And I thought it'd be interesting to go down the list. They call it out by state, and then they call out the top cities in those states. So I figured it'd be a great way for you to see if any of these jumped out at you as areas you've thought about or that you've been interested in, or maybe you live in one of these areas and you never really realized that these were considered or are now, because of the way the markets are working, top areas for investment. And it sort of dovetails with data that we've covered before. This doesn't completely operate at odds with other data we've talked about here, particularly when we're comparing judicial to non-judicial states in terms of how foreclosures are handled. Because remember, for those of you who weren't listening to the show, this would probably be a couple of months ago, we had a chat about the difference between judicial and non-judicial states and how the judicial states still had some properties being worked through the process, which in some ways really gave you some unique opportunities in those states to potentially take advantage of that dynamic, right? Where you might be able to get yourself a good deal on a property because it took so long for a lot of these properties to work through the system. And we'll see how that plays out here. I kind of prefer ones that really focus more on, a little bit more hard data on the different levels of investment, not just how much does the property appreciate, but also how much are folks making on rentals, right? What's their rate of return really on their money that they're making? And a lot of times you don't get that from these articles. We do get some of that return on investment money type estimations, but they don't really give any background to it. So it's tough for me to verify their data. So let's go ahead and just jump onto their list. The first one they put on here, and I'm not sure they ranked this in any sort of an order. It seems like they did, given the comments. But number one on their list is Florida, that they label as the land of investment opportunity. Now, there was a study completed by Local Market Monitor. And that's a data company that's based in North Carolina. Now, according to them, Florida is one of the top markets as far as real estate investment opportunities go. Now, this dovetails in with what we've talked about before. Remember, Florida is a judicial state, so it had a lot of delayed foreclosure-related stuff. We've had recent news relating to the luxury markets in Florida getting hit, which I think is in the longer term going to be a bigger player in terms of what prices do in the luxury market. But, when you're really shopping for properties that are going to serve as an investment, you kind of have to be operating at a very different level if you're shopping at that luxury property level in terms of those kinds of price points. Can you make money with luxury properties? Yeah, I've got a couple of folks I know who have done this. More specifically, one in Hawaii who went sort of the opposite route I did. I went with the opposite side from Honolulu in my evaluation, and that was primarily because it was an ability to acquire a property for less than you'd get in Honolulu, but be able to offer a unique enough experience because you're away from the city. It's like Hawaiian country living, but being right there on the water, right? With the important thing being you're right there on the water. That's the reason you're in Hawaii, right? It's the beaches, it's the sunshine, it's the ocean. So as long as you're keeping in mind why people go, offering these different niche opportunities can absolutely work for you without you blowing a huge wad of cash, I guess is what I'm trying to get at. So in these areas, one smart thing to do is to think to yourself, why do people go there? And then try to make sure that those main motivations, like in the case of Florida, big ones are going to be proximity to the water or easy access to it, or if possible, being right on it. That which would make it ridiculously more attractive, right? Which means you're going to rent it more, depending on what you're doing. If you're doing a vacation rental, that's one thing. It's kind of a different psychology there. If you're renting it for long-term rental, that's a different thing too, right? You don't necessarily have to have it right on the water for that, but you can probably command a better price for it given that. And I think your price tends to be protected more when you have properties that, due to their location, just really leverage off of what the community that they're in has to offer, right? So just to throw that out there right at the beginning. Okay. So let's get into it. What are the areas within Florida that are grabbing the top spots in terms of the top 20 best cities to buy in for 2016? Now, those include Orlando. For those of you who aren't really familiar with Florida, Orlando is about halfway down the state. If you were to look at it as just the eastern coast of Florida as it goes down past Miami to Key West, it's slightly less than halfway down the state. It's a little bit more on the eastern side of the state than the western side of the state, but it's definitely inland. This is not an on-the-beach town. And for those of you who really are kind of having trouble picturing it, if you picture the part that sticks out to the west as the handle of a pan, and that's why they call it the Panhandle. That's the Panhandle portion of Florida. And then the rest of it would be just sort of the part that dangles down. That's the section we're talking about. So the part that peninsula's out in Florida, it's about halfway down. And again, it's inland. And it's ranked right up there as a top spot. Next is Fort Lauderdale. Fort Lauderdale is just north of Miami, and Miami is down on the eastern side of the coast of Florida, but extremely southeastern end, for those of you who aren't familiar with that. And that tends to be the more attractive side in terms of investment. You'll tend to find most folks finding their best investment opportunities on the eastern side of Florida. However, Tampa, which is just a little bit further south of Orlando, but is coastal on the western coast. So it's near. There's St. Petersburg. Clearwater is actually right on the Gulf, and Tampa has sort of an estuary that comes in to greet it, so you get access to some water there. The reason why I mentioned Tampa is because that's also on our list. Let's see here. Let's cover the list real quick. Orlando, Fort Lauderdale, Cape Coral, Northport, Jacksonville. Now, Jacksonville's interesting because it's at the extreme northeastern end. It's an inland city, and it's very close to the border with Georgia. So the point I'm trying to get at here with these different cities is you don't have a single template that works in Florida. These are cities that are tending to be popular for different reasons, not just necessarily access to the ocean. Obviously, you're getting that in places like Miami, Fort Lauderdale, Palm Beach, Tampa, that type of thing, but not the same as you would with Orlando, which really doesn't have direct access to the ocean, or Jacksonville, which doesn't have direct access to the ocean. So you're getting sort of a different set of criteria that make these places attractive. And then also on the list is Tampa and West Palm Beach, which is also on the eastern shore of Florida. Now, Miami was also called out as one of the hot real estate investment markets by Bigger Pockets. We actually covered that article back when it first came out. It's got an 18.6% year-over-year return on investment, and the public perception, according to them, is that it's a great place to live. Orlando is the number 2 overall city in Florida on the local market monitor list. It has a 6.7% population growth from 2011 to 2014. It's got 3.7% annual growth and a 28% 3-year home price growth forecast. So that's projecting forward, right? That's saying that in the next 3 years, you're expected to see an increase in property values of 28%. Now, the current average home price is $202,809. So you sort of blend all of these together, and not only does that spell a market that's very enticing for an investor, but also a great potential place to jump in as a new investor. So if you're in the Florida area, or if Florida is a state that you've always been interested in, or sections of Florida have interested you, it seems to me that this is a potentially good opportunity for you to get in on an area that's projected to see an awful lot of growth, particularly the Orlando area. Now, next on our list is Texas, and they talk about this one in terms of the market being very robust and in terms of having a high level of livability. So I guess a lot of cool things to do. Texas was the state with the second greatest number of flourishing real estate investment cities. San Antonio at number 3, Dallas at number 6, and Austin at number 7. Thanks to the state's strong energy sector, real estate damage caused by the 2008 recession was relatively mild. Local housing market remained one of the strongest in the country. Year over year, job growth is strong in all 3 of these cities, and population growth rates are high and rising. 9% in Austin, 6.2% in Dallas, and 6.1% in San Antonio. Now, as far as the Austin stuff goes, now I don't spend a lot of time looking at the Dallas or San Antonio numbers, but Austin has absolutely been on our short list for a very long time in terms of enticing cities. In fact, when Austin started to get even a little bit too hot itself, we started shifting our gaze northward to Round Rock, which is basically a bedroom community for Austin. It's just the first city to the north, and that still, I think, represents a great opportunity for folks who are looking to invest, particularly in the Texas area, in Texas or in Austin specifically. One good thing about cities like Austin is their economies tend to be a little bit more diversified. Orlando has got different things going on for it as well in Florida, and you can see how if one area got hit, or if there was a slump in one area or another, these folks tend to be pretty robust, and these communities tend to be able to weather it. Now, I've gone back and looked at the numbers for Austin specifically relating to the downturn, and as they mentioned, it was very much minimized there, but it was really hardly a blip at all. If you were to look at just the plotting of home values and what was going on and average sales prices and all those sorts of things, you would never guess that the rest of the country was experiencing what they were experiencing, why Austin was seeing their prices staying relatively flat. So it's absolutely one of those communities that seem to be more immune to the downturn than a lot of other areas. And that can definitely be a big comfort if you're someone who's looking at jumping into investing and you'd prefer to have a little bit more security along with that, rather than being worried about what the market's going to do next. Next is the Carolinas. They call them affordable investments in a growing marketplace. This is another one we've actually talked about in the past, specifically the Charlotte area. This was a show from probably 4 months ago. Several cities through North and South Carolina were included among the best real estate markets: Charlotte, Charleston, and Columbia. The Charlotte, Gastonia, Concord metropolitan area has an average home price of $220,000, so that's actually even a little bit higher than what we were seeing in Orlando. They have a 22% 3-year home price growth forecast. They have 5.5% population growth and 3.6% job growth. All good numbers. According to Realtor.com, the investment prospects of this region, and also added Charleston and Columbia in South Carolina as both ideal places to invest in and to move to. So you've actually got 2 different organizations here that are sort of putting these out there as great communities to consider when you're looking into investing. Now, next, this one's a little bit of a surprise to me, and I think in the past, I can recall saying those exact same words. Every time this state comes up, I'm surprised. But we'll go with it here. Primarily, this is a great place potentially for starter investors where prices are low with a higher return on investment. So what state are we talking about? Michigan. According to the local market monitors analysis, the number one U.S. city for investing in real estate is Grand Rapids, Michigan. According to Realtor.com, Grand Rapids is one of the most affordable cities in the nation in terms of living expenses and housing costs, making it an attractive and growing marketplace. The city's job growth is 14th in the nation. Grand Rapids has an impressive 3.1% population growth rate. The 3-year home price growth forecast is 22%. Now, that's the same percentage increase expected for the Carolinas, but you're getting into it at a much lower price at $154,348 for the average priced home. So that's kind of ridiculous. It makes it to the point where you might be able to acquire a property and then more quickly acquire a second property, right? I mean, if you're someone who has the financial ability to get a loan on, say, a $200,000, $300,000, $400,000 house, well, in a market like this, you suddenly find your buying power to be higher. And what's also interesting here is I think that given this reality of that price for the average home, if you're someone who's interested in multifamily, if you're interested in duplexes, quads, or even 5 units or more being in your portfolio, this might be a great way to go. Now, probably once you get up to 5 units, 4plexes, the price might be not a great opportunity for you. But if you're interested in jumping in with a duplex where you can have 2 units to rent instead of 1, usually the amount you're paying above the average home price for a duplex isn't that much greater than the average price for a single-family residential home. So it could be an excellent opportunity for you. That is something I'd absolutely look into in a market where homes are priced that reasonably. They also mentioned that Detroit is slowly climbing the ladder of investment potential. They're saying it's got a 16.2% return on investment for real estate investors. Housing is extremely cheap, but according to Rise, soon, according to them, making it an extremely hot market for savvy investors. That would be my warning. I would not feel comfortable jumping into a place like Detroit unless I went there and spent some quality time really learning what the ground truth is, finding out what the Planning Commission has in store for Detroit, figuring out where areas are in decline, where areas are likely to be improving soon, or that are already starting that process of improving. If you want to find something that's a little bit more secure in terms of investment, you'd want to go for that area that's already showing signs of improving. Let's see here. Now, that's kind of the extent of the communities that they covered in this article. And, of course, I'll include a link to the article in the show notes for today's show. But now let's get a little bit into what would you do? What would be your first steps to analyze this? Because remember, these are numbers that are taken from a much larger area. So one of your first jobs, if one of these areas interests you, is to start getting familiar with what the price layout is. If you're looking at a map of these different areas, what prices are you seeing now? And what I typically do is I pick the 3-bedroom, 2-bath sample. And what that means is I do a search in, say, Realtor.com and search just for 3-bedroom, 2-bath homes without a price limit entered. And I look at these areas and see what's the distribution I'm seeing. Why is this one $150,000 and this one is $300,000? And you want to sort of be able to, in your head or digitally on your screen, or even just print a map out of those cities, and then sort of plot out with a glob what you're seeing in terms of average prices for different areas. And once you've done that, you have probably, through doing that, intelligently predicted where the current lines are already drawn in those areas by the folks who know the market and know how things break up, and can then, if you get an expert on the ground, explain to you why are there these price differences in these various areas. And different tools you can use. You can search for crime heat maps for these different cities so that you get an idea just in a big, broad view through just different colorations on the map where the most types of crimes are committed, what kinds of crimes, those types of things. And these can all serve as tools to help you decide what areas do you want to look in terms of finding yourself an investment property. And the great news is you don't have to talk to a real estate agent for any of this stuff. You can go in there and work through this and feel relatively confident that you've at least ironed out the general areas you want to look in. And once you've done that, start reaching out to agents in these areas and say, what are the areas you would suggest I look at? Don't tell them you've already done any research. Ask several agents in one go, say 3, 4, 5 agents. Just email them and ask them, tell me the areas you would invest in, why. And then you can sort of gauge their response against what you've already learned. And you'll want to have a full explanation from them. And if what they're telling you doesn't jive with what you've seen, you're going to want to ask, because there's the third part of this equation is going to be what you want to do with the property you're going to acquire. Clearly, if you're going to do the purchase, remodel, and sell, the flip model, that's going to be a different strategy. But the way I like to always do it, simply because that's the way I lean, that's my bias, is to find out what homes rent for. So in addition to doing that crime heat map, in addition to doing that map with average sales prices or sales prices of different homes, and then sort of noting the areas of difference where for some reason these 3-bedroom, 2-bath homes are going for $100,000 less than these ones on the other side of the freeway, that type of thing. You're going to want to then plot out the same sort of thing for renting 3-bedroom, 2-bath homes. What are they renting for? And see where the interesting disparities are. Things I love to see are areas that are relatively inexpensive but somehow manage to maintain a higher rental rate than other areas. One thing to keep in mind, though, is remember when you're looking on Zillow, Trulia, whatever other site you're browsing, remember that since these homes are telling you that they're for rent, they're not rented. So if you have a very small sample, it can be very difficult to figure out what the status is. Are these folks that just had ridiculously high rental rates that they were asking for? However, one good thing is normally with a lot of these rental sites or even places like Zillow, if you keep track of the properties that are currently available for rent over the course of a couple of weeks, as they disappear from being actively available for rent, you can assume that that property has rented. Now, the other alternative is to actually reach out and contact the folks who have these rental properties noted and ask them the questions like, how long has the property been on the market for rent? Have you had any people come in offering to rent it for a lower price? Those kinds of things. Try to calibrate yourself to what the expectations of the landlord are to see if there's someone who has, because I don't want you to get in a situation where you have very few homes to compare to in one area, and you see one guy who's trying to rent that house for $4,000, only to discover that home's never rented for that amount of money, and this person's really just fishing for some ridiculously high rent with no hope of success. It would really stink to base your numbers on that. So once you've done this and you've sort of figured out what these numbers are, that's when you need to reach out and get a little bit more on the ground truth. And you can do that by calling real estate agents. You can do it by calling property managers in those areas. And, that's a great way to go. Call multiple property management firms. Let them know that you're interested in investing in these areas and you would like their feedback on where the best rents are garnered in different parts of the city. And do this again with 3 to 5 different property management firms and see if you get a consistent answer. It's really going to help inform your decision on where you want to focus your purchasing energies and also give you a much better idea of, once this is all said and done, where you want to be in terms of profitability. Are you going to be positive cash flow, or is it going to be too tight? And it'll help you make that decision a little bit better. Okay. So that's a good way to go. Start with these cities. I think if you jump in using the techniques we just discussed in terms of getting yourself familiar with it, and at every step of the way, realize this is not you making a commitment to anything. This is you checking out the marketplace. If you start talking to real estate agents, if you start talking to property management firms, if you start talking to landlords that are out there, never feel guilty for asking questions to these people and feel like you're going to be pressured to actually take action on something. Will they say, hey, when are you looking, what's your window? What are you thinking about doing? When are you thinking about doing it? Be perfectly honest and just say, right now I'm just gathering information, and based on the information I get, I will or won't take action. But I don't want you to feel part of this process needs to be reaching out to folks that know what they're talking about. And, as an investor, one of your number one skills, right? All this other stuff we talk about is basically, it's math, right? It's logging down data, trying to see trends, easy stuff. One of the hardest things for folks to really understand is the importance of being willing to embrace other people into the process to help you do it better. None of these people are going to cost you anything. The real estate agent you're going to use isn't going to cost you anything because they're going to get paid based on what the listing agent got from the seller, assuming that's how it works in your state. I'm assuming that's the way it works most everywhere. The property management guy isn't going to be upset because if you do buy a property, he's hoping you're going to use his or her services. So, and the landlord guy, well, if he's going to be a little bit upset because you're asking questions, well, then he's not going to answer your questions. There's plenty of helpful people out there. I know when I was a landlord, when people asked me called me with questions, I was happy to answer them. Will you occasionally meet a jerk who might give you a hard time and tell you to stop wasting their time? Yeah, but just smile, move on, and keep plugging away. Don't feel like you need to not start asking questions of people till you're ready to lay down the money. Because you know what? The bottom line is you don't know if you're ready to lay down money till you've talked to these people. So embrace that. Don't let it hold you back. Don't let it stop you. What's crazy is that's one of the number one things that I think stops a lot of aspiring investors is that need to reach out and start talking to people about different things for fear of inconveniencing someone or for fear of looking stupid. Let me just clear that for you right now. Absolutely feel totally at ease with asking the dumb question in the room because I'd rather have you ask a dumb question than make a dumb mistake. You will pay money for committing a bad mistake. You won't pay a dime for asking a dumb question. So absolutely always be willing to do that. And as a real estate guy, when someone says something I don't know what it means, I am perfectly willing to look like the dumbest guy in the room by saying, excuse me, I have no idea what you just said. Can you explain that to me? Because remember, this is a great opportunity for you, but it's also a big deal. So you want to make sure everything's clear, you're getting everything clarified, you're moving forward with the knowledge without assuming anything, and absolutely feel comfortable with asking those questions that you think might be taken as dumb questions. All right, folks. As always, thanks for making this show a part of your daily routine. I absolutely appreciate it. If you could take an extra couple of minutes out of your day and write a review, give us some stars over on iTunes, I would be deeply appreciated. That's how the algorithm works to help get the show to the front page of the most popular shows in business and real estate. And that's my goal. I want to get it up there. I want to get up there with the big boys. And as always, thanks for listening, and I'll talk to y'all next time.